Gurmeet Chadha also joins us on the show. Gurmeet, I'm not sure whether you track Sun Pharma really, really closely, but if you do, any sense on the numbers?
Yeah, I've been just seeing it on screen. It looks good to me, considering that all three geographies, which is India formulation, US, and even rest of the world has grown. Rest of the world also is up 7%. I think the specialty side is anyways picking up, and there has been some better performance in if you see the previous quarters, with also the pricing pressure reducing. So we'll have to look at it more detail, but optically, the numbers look good. In fact, pharma in general for this quarter, there have been more positive surprises than the negative ones.
Okay, Gurmeet, glad that you analyzed those numbers for us in a jiffy. But Gurmeet, just the overall pharma space as well, right? Quite a few bottom-up opportunities, I guess even you must be spotting there, if at all you are recommending investing in pharma right now.
No, absolutely. So, so one obviously is the branded generics and play. We saw a good listing even for Mankind Pharma. Other numbers have also been pretty okay. If you see the IPM data, which comes month on month, that's shown improvement. Then there was some recovery in the CDMO custom synthesis play with export data. I think March export data was one of the triggers. Though the results have been a mixed bag. So, for example, Newland, Syngene, even Sovereign, for example, reported very good numbers. Newland actually made a new high. They talked of two more molecules probably getting commercialized from the development space. And then you had Laurus and DBs reporting slightly, subpar numbers, but normalization processes. So it was better than previous quarter, but still way off from what we have seen during the COVID high. So I think this business is lumpy. This entire, novel custom synthesis, or in a very simple language, the global pharma outsourcing manufacturing opportunity in my view is pretty huge. And some of these companies have done very high capex. So Laurus has done almost 2,000 crores of capex. Divi's has done last 3 years the capex they have done in probably last 20 years. And some of the results will follow, but it's a lumpy business. You don't know when the molecule gets commercialized. So you got to be in for a long haul, and your risk tolerance has to be high. Also, the hospital segment, in my view, still looks good. I think the occupancy rates, the elective surgeries, the average revenue per occupied bed, all metrics are stacking up nicely. It's more a capital intensive business. That's another space we are tracking.
So a lot of these things that you like in the pharma space. But what about Reliance today, Gurmeet? That's up by a solid 3%. How are you looking at this one?
No, I think it was long due. I mean, it's been a while. It consolidated. To me, I think the one immediate, well, the earnings were pretty strong. I think the O2C segment did pretty well, while Geo continues and retail continues to get more traction. Also, I think the demerger of Geo Financial Services is was another small trigger, which was the market was valuing it at about 200, 220, the Geo Financial says. I think the bigger play would come when the market, this one concern that, the free cash flow generation will again get, subdued because of the capex they are doing on both Geo as well as on the energy and retail. Just to see that I've actually lost count of how many acquisitions they have done in retail. So that's been one concern that which happened when they did go aggressively. The gross debt crossed 3.5 lakh crores when Geo was in the launch stages. So I think maybe some monetization of the energy business post this demerger of Geo Financial, I think would be one major catalyst market is looking at. And and then probably some settlement on the windfall tax side also, so that you can get more clarity on the earnings. So I think even despite the run-up, Reliance is quite nicely balanced.
Gurmeet, are you as surprised and shocked by the performance of Page Industries as we are?
Yeah, I think the results were a shocker, and when stock prices when they are priced to perfection, and Page has had a great track record. And I remember the IPO came at what, sub 300, and you are at what, despite this correction, that it's been a great wealth creator, and that's why you give them 60, 70, 80 multiples. So what has happened in both inner garments as well as athleisure wear, the competitive intensity has gone up. A lot of brands have come up. Page enjoyed a lot of exclusivity, and they are very dominant, especially in women innerwear. But the opportunity size is huge. I think the market is moving towards more premiumization. Even the mid-market segment, players like Lux, etc., are also moving in there. So we'll have to probably see whether it's just a one-quarter thing or there's something more structural playing out. So I'll probably wait out for another 1 or 2 quarters and see how they are doing. So they're working on new segments, which is athleisure, the kids segment. Then they're also into Speedo, which is into swimwear. So while the market looks good, we'll have to probably see if there is more competitive intensity, which is impacting both top line and bottom line for them.
Okay, just looking at a couple of buzzers here. Indus Tower, Cummins has been a strong one, has seen a good rebound after that, the day it crashed when the earnings came out and the management set out that guidance. But since then, it's seen a massive rebound. Today as well, it's holding higher by almost about 6% in the futures. Z, after that NCLT relief, that's holding up 7%. And Naukri is the one which is in a tizzy of sorts. Almost an 8% move is what you're seeing on the futures for Naukri. Erstwhile Info Edge, that stock is holding out very, very smartly as we speak right now. Within the large caps, of course, it's Sun Pharma and Reliance. In fact, Sun Pharma has now taken over Reliance as the top performer today, followed, of course, by Hindalco, Divi's, HCL Technologies. They all also are looking good. Rudramurthy, just two charts here for you. Z, which is an earnings reaction, or rather a news-based reaction, and Naukri, which is an earnings reaction. Both stocks seeing massive gains today. You'll have to unmute yourself.
Yeah, sorry, Aisha. If I have to pick one of them, I will surely pick Naukri and not Z. Z for me has been a disappointer always. This stock comes to around those levels of around 177, 178, and again goes to those levels of around 210 and again fizzles out. But if you see the medium to longer time frame trend, yes, from those levels of around 270, Z has always corrected and then taken that support at 178 levels. So for me, I will rather prefer Naukri and buy Z once it crosses decisively that hurdle of around 215 to 20 zone. And once it crosses 220, yes, Z looks very attractive. And if I have to look at levels at InfoEdge or Naukri, so for me, this stock today, the way it has given that price breakout, it looks to me very, very strong. So I would wait for any small profit booking to come out or any dips to levels closer to, let us say, 4,150, 4,100 will be a great buy. And having gone past 4,000 today, and it will definitely close above those levels, this stock can definitely test its all-time highs very soon and stock can even go further up from there. So for me, Naukri looks a very good buy. Wait for any dip if you can get at around 4,100, 150 zone, or even at current level, I will buy small quantity and add if I get any dip, and I will look at higher targets of around 4,500 to plus to come soon on Naukri.
The take coming in. In the meantime, other stocks which are reacting from the IT and the tech pack. Nuresh, eClerx is doing quite well in the trading session. Nucleus Software, I'm not sure if you track that one, but that's logged in the upper circuit of 20%. Sonata Software is higher by 5%. Coforge is trending higher by 4%. What would you pick as the top bet?
So I would pick eClerx out of them. Nucleus has already gone up 20%, but eClerx is interesting because the stock has gone through a sideways consolidation for the last 1.5 years. And if we look at the last 6 months, it has made same tops around 1530, 1550. Today also we are around that levels, which is a short-term range breakout on cards. And the stock, say 1250, 1300 was the bottom, 1550 is the high. So that gives us a target price of say 1800 in the short term. So at 1530 to 1550, eClerx looks interesting, would keep a stop loss below 1450 and expect a target price of 1800 plus.
Okay, just looking at the charts of Z, given the big relief that one has seen for the Z-Sony merger, the NCLAT, remember, has set aside NCLT order directing NSE as well as BSE to review the grant of NOC. NCLAT has held that as per principles of natural justice, Z should have been heard by NCLT before directing NSE, BSE to review this no objection certificate. That stock, of course, is holding out very, very smartly in trade as we speak right now. But just generally, right now, just looking at the charts of not just Z, but let's see what some of the other media names as well are up to. So even a PVR Inox, for instance, is actually seeing a bit of a gain coming in. There's Sun TV also, which is holding up higher by about almost 1.5% as we speak right now. Naresh, just very quickly on the charts of Z as well as Sun TV, if you're looking at it.
So Z could be a case of a false breakdown. So the last bottom for the stock in February was around 175, 178. Today also we went below, very close to that, and recovered sharply. And this is the price point where it had the whole move had started back in 2021. And now today, after making a gap down, it has recovered really fast. Now in this case, I would wait for much more better confirmation about 195, 200. If it can close about 195, 200, it becomes a case for a reversal. Same is the case with Sun TV and a lot of these media names, which the whole index and the bunch of stocks have continued lower or gone nowhere for almost 2.5 years. And now we are starting to see first action. So Z could be interesting from here. Sun TV 400 has been the base, 550 has been the top. A lot of other names like TV 18, etc. They've all started making recoveries after this sharp crack in near term. So would be positive here. Z could be interesting. Would wait for a further close about 195, 200 to confirm the stance.
Your take on the entire manufacturing sector? If you look at the week gone by, Dixon has been high by 20%. There's something called an LG equipment, which is up 15%. Cummins has seen quite a bit of comeback after that one-day decline that we have seen. And even other names, the likes of Siemens, etc., CG Power, they're all up anywhere between 10 to 15% in the week gone by. Would you be a buyer despite the run-up on these capex and industrial stocks? Gurmeet, the question is for you.
Yeah. So I think there are pockets we are quite constructive on. One clearly is a defense pocket where there are three things playing out. One is the capex in defense has been in line with the nominal GDP growth. For India, it averages about 2.6, 2.7% of GDP. So if you see last 9 years, it's been about 11-12%. Then there is an import substitution because the government has banned almost 451 components. So we are seeing some uptick coming there because of the import substitution. And third is the nature of the business because the aircrafts, the systems, the artilleries get obsolete and you need to modernize them. So that's another opportunity, which means that the sector, if you pick your things well, can clock 15-18% growth overall sector. And then if you map the value chain well, you can. So there are PSUs which are doing well like HAL. Then you have some mid-cap names which are combination of both explosives as well as defense like solar, and then there are some small cap names. So that's something we like, and I think it is more long term. Electronic manufacturing services, EMS, again is another long term opportunity. We've seen very good numbers now from Amber, Dixon, and few more. I think here also probably the mix is changing from OEMs to ODMs. Because it's a high volume, less margin business. So as the shift changes, probably you will make better money. And if Apple can source, a few $1 billion, I'm sure a lot of other brands will follow in terms of high precision electronic manufacturing. And then you like the overall, you can play also proxy to manufacturing uptake through, cables and wires because you need more energy, right? So you pick something there. So we like KEI Industries, Polycab, etc. So you play it as a combination, as I said, and pretty constructive here. And I think share of manufacturing to GDP, you will see more improvement as we go forward.
Okay, Gurmeet, just stay right there. I'm just going to come back to you. Let me just get in some BTST trades as well before we wind up for the day as well as the week. Rudra, what's on your list?
So for me, I have picked up IOC for a BTST trade. So buy it at current levels, look at initial targets of 100, stop loss would be 87. And Ambuja can be again picked up for BTST, looking at targets of 445 with a stop loss of 416.
Right. Naresh, what about your BTST ideas?
So that would be a buy on HCL Tech, stop loss at 1120 and a target price of 1180. Second is a buy on Gujarat Gas, looks very promising, setting up for a breakout. Stop loss at 488 and a target price of 510.
Okay, that's some BTST trades coming in. I just want to bring up the stock price of InfoEdge, and we were just chatting with Hitesh Oberoi, start of the show about half an hour or rather 1 hour back actually, and he was talking about as to how he is expecting IT hiring is going to slow down for another couple of quarters. Having said that, he very categorically mentioned that he does see improvement come by from the third quarter onwards. Gurmeet, just looking at the price action for IT and more so mid-cap IT, it seems like the worst could be behind because there is some significant buying that we've seen kick in for the last 3 to 4 weeks.
Yeah, so some of it could be value buying, and I think my personal view is there is too much stress on generative AI. So, for example, if you see the recent deal of TCS with Google on generative AI, they've added 40,000 people for data feeding. And this, since this is a self-learning system, you need to continuously feed. So maybe 2, 3 years down the line, the system will get evolved, and then you again need the application. So one is the technology part of it, second is the application part of it, which is where our companies fit in. Infosys launched a platform called Topaz, which is their generative AI. So I think there could be short-term disruption, and it's quite possible. We saw that with Metaverse last year. I remember Y2K when we were doing our MBAs, right? Everything was going to crash. So I think effectively the use of technology and digitization will only go up. My view is it's better to wait it out for a quarter or two. There are more opportunities in the market, but in terms of negativity, probably a lot of it is in the price.
Right, fair point. Okay, that's the take coming in on the IT sector. But let's begin winding up for the day as well as the week. Gurmeet, glad that you could take time out and join in. Thanks for joining in as always.